Hello guys, welcome to the Trading Parrot. Today is Saturday, just one day for that weekly candle close, and I have to cover what the price action is currently doing, which is having a strong battle against the previous highest close weekly time frame candle, while at the same time trying to break out above the yellow line to reclaim the previous range on the weekly as well. Today's video is gonna be back with alpha. I'm gonna give a quick update on what's going on with the recent breakout on the 4-hour that broke out at 105, and after more than 2 days is still ranging around 105k, getting everybody extremely frustrated. And for that, we're gonna go back into the past performance in 2021, see the similarities that are still applying. On the update on the daily time frame today is gonna be very interesting. Everybody knows how many rallies we have had on the daily time frame against resistance. Every time we hit that 107, 106, 109 and see rejections, we need to be on the lookout for a potential repetition of the same recipe. And of course, we're gonna cover liquidation levels as usual. I'll give you my take on that squeeze that I still think is incoming, the diamond pattern. We'll cover the order books, including this 110k selling wall during the week. If you miss my updates, you're probably not aware of the distribution warning I gave you yesterday. Thanks so much. In that video, we got 770 likes. We're getting closer and closer to 1,000 likes in a single Bitcoin video, which is a huge milestone for the channel, and only you guys can make it happen if you hit the like. And continuing with what we have prepared for today's alpha, which I'm really hoping you're gonna enjoy it all end to end, we got two special areas that I wanna cover on Bitcoin that I'm sure you're gonna love it. Number one, the monthly. We ran out of time, according to linear regression, to stay on RSI above 70. I'm gonna share my take on that, and I strongly encourage you to think about it and leave me down in the description some comments of whether you think this still applies or we should just ignore it and let it pass. And number two, many people across all social networks has an obsession with this particular pattern. They are connecting on a regular chart a trend line touching all the tops of Bitcoin, expecting this to be the top. And we're gonna have a little bit of fun at the end of the video using ratios of Bitcoin against NASDAQ and against the S&P. And we're gonna use it for an alternative hypothesis, which is gonna show us, instead of this being the top, some continuation. Yes, a little bit of hopium there, but I promise it's going to be fun to listen to this crazy theory. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos, and it's never too much. Hit that like down below. Let's get to 1,000 likes and let's go into the content. Yes guys, this video is going to be packed with alpha. There's so much alpha that I'm getting worried. What am I gonna talk about in the video on Sunday, where I typically try to give you a condensed high quality number of alpha, and it's going to be challenging tomorrow to get up to the level of the typical Sunday alpha video. So I'm gonna need your help in the comments down below with ideas for the Sunday video. One trend that I'm noticing is that this peak of breakout of interest into Bitcoin that we noticed earlier last week, that I saw initially very promising, has been shrinking more and more, and now it's barely at the number of 40. I have the feeling that it reached somewhere closer to 50 at some point, but as we end the week, retail has been pulling back once again in fear. Next week, guys, is going to be packed with events, economical events. As you can see in here, I think the most important event is the rate decision from the Federal Reserve. If you watch my video yesterday, we noticed a small reduction in the Federal Reserve balance sheet. So I wonder if that is forecasting anything in here. There are some fears towards no cut. We will have to wait until Wednesday. In Europe, there's tons of news. Economy hasn't been great, so I'm expecting potentially to hear some bad news, particularly when it comes to unemployment rate. I hear a lot of people talking about losing their jobs, and this includes companies, universities, everything. Everybody I know it's having trouble or knows someone that is having trouble at the moment, including people that are extremely educated and prepared. We're gonna end the week with PCE, personal income and personal spending month-on-month. We are 11.89% on the month on Bitcoin. This is how the picture is looking. 3 years in green, 3 years in green, and 3 years in green. The candle so far, the third one one is not really impressive so far. So let's look at the weekly. Here is the first chart with big battle going on. Why is that? If you look carefully, the weekly, the highest close in history of Bitcoin has been 104.4, and we've been the whole week monitoring this weekly candle, making some assumptions. We said if we close below resistance, that is okay. It's obviously more bullish to put a new higher close, and we have to take in consideration that the price has already reached 109.3, which means that the lower that the price closes, it creates a larger wick to the upside, and that is perceived, particularly in weekly, monthly time frames. Seeing these large wicks to the upside are pretty scary to investors, so we want to minimize how low we end up closing the weekly. At the moment, you can see that we are $100 away, right above the previous highest close, but we really need to make a last effort before Sunday close, and hopefully close somewhere in here at 105 or 106 will be great. That makes it bullish. What will make it really extremely bullish is to close the weekly above 109, because that is taking out this and canceling out the narrative of potentially putting a double top. And here it comes the second narrative around what's going on the weekly, which is the potential for forming the second part of the M pattern. This M pattern has a neck at around 93.7k, and if we draw a line measuring the high of the pattern towards the neck from the top, the highest close, that takes us back into 80k, give or take. And that's why I think it's very important to increase the probabilities to prevent such bearish scenario, to see this candle close on the weekly as high as possible. Beyond 104.4 is good. Beyond 109, the likelihood of going for that bearish scenario reduces to a bare minimum. We're gonna go with the past performance just to make sure that we keep track of what's going on in here. So this is the past performance. This is where we are right now, and you can tell that we are creeping up after this week to the upside that we compare to this one. So we are in a scenario more or less like being still in here. Definitely we haven't had the God candle. If we had that God candle, it will look more or less something like this into the areas of liquidation up until 117k is where we pause having red, which is high liquidity, and that will definitely resonate with this diamond pattern that people are talking about, that has potential bearish scenario hitting this small liquidity in there, and a bullish scenario taking the big liquidity above it. I'm going to cover the distribution that we talked about in the previous week, that caused that some people saw it when I posted on Twitter and they started freaking out. Some of them told me I just sold everything because I freak out when I realized that whales are distributing. Guys, whales distribute every cycle during the bull run. That is their job. Whales accumulate in the deepest, darkest hour of the bear market, and during the bull rally, every time we put a new price higher, they have a schedule to continue distributing into weaker hands. That doesn't end the bull cycle because they do this continuously, and their schedule is to eventually distribute all of it. What no one knows is how much they have left to distribute, when are they gonna stop, or even whether they're going to end up still holding some of it. My intention to share that information is to prepare you to make a decision, and you can decide whatever you want. If you want to decide to sell now, that's on you. If you want to sell on this chunk, do that, or on this chunk, or even be very optimistic and think that eventually we're gonna get liquidity even higher at 150. Maybe that's your exit. Good for you, but have a plan and not just give your back to the whales and let them do whatever they're doing, because they're being dodgy and they're gonna trick you, and eventually they're gonna be done with the distribution and you're just gonna see a big correction, and that time you're just gonna want to punch yourself when you see the mirror, thinking, why I didn't take profits. I guarantee you that if you don't have a plan, that's precisely what's gonna happen. Let's go with the 4 hour. This is gonna be very short. There was a breakout on 23rd of January. At that point the price reached 105, and since then this is been just oscillating around that number, not going anywhere. Yes, we got to 107, but then we come back down, and that is part still of the stupid pattern that is calling for a squeeze. Are we still within in the squeeze? The answer is yes, in my opinion. This is a squeeze, whether you look at it as a symmetrical triangle or you decide to think that this is a diamond. You know, whatever you see, this is a squeeze. And what we care is that there are currently a small accumulation of longs being trapped at around 95, and we are seeing them appearing in here. Some of them are increasing their liquidity at lower levels, putting the risk even at 85k. You can see that the red has increased from the 24th of January, and it's evident to me that it's becoming really juicy, the higher part in there, and that compared to what is a stake at a similar distance to the downside versus to the upside, definitely the upside, it's much more packed in liquidity and offers a way more substantial reward for the market maker. But I remind you something, market maker is a tricky bastard, and there is a small chance that they can dump the price into here and then still go up and take the top. So how does it work that? Well, many people are gonna start seeing the opportunity of going up, and they're gonna place their stop losses in here, in between here and 95. And when the market makers start seeing that this is becoming juicy, they might change their minds and think we might as well just go for a quick shop in here, take some stop losses, and then we go higher and we take the rest. I mean, instead of taking a bunch of billions, we can take maybe a 10% more, and the effort is marginal. It's not guaranteed, but it's good to have it in your mind. And that will look like the RSI coming back for a retest and then start creeping up and continuing to the upside, still respecting the breakout. I've seen that so many times that it doesn't even causes me any surprise anymore. Let's go to the daily. On the daily time frame, we talk about these rallies that are hitting resistance. And what I mean by resistance is the resistance from August. This line is there, is still the boss. That's the way we've been calling it, because every time we get into the white line, we see a rejection. So wouldn't it be worth to spend 5 minutes to think, what if we get another rally into resistance? How is that going to look like? How high can we get there? Is it worth considering and maybe taking some profits if we get there? Or do we believe that we are ready to take on the white line and continue going higher? Liquidity so far says yes, and we need to take in consideration the distribution currently going on, not the one from the SOPR indicator I showed you a few days ago, but the one that has to do with these long-term holders of 7 years, causing a huge spike, which we can see right here. This is a few days ago, last week, and you can see that this purple spike is from 7 to 9 year holders. And I'm going to zoom in just in the area of this cycle from the bear market, and the only spike that is larger than that is this one that happened during the capitulation of FTX. Yes, Wells got scared at that point and they sold at the bottom of the capitulation. They distribute, they were 7 to 9 year old holders, and they say, okay, this is enough for me. I'm gonna call it 9 years of holding Bitcoin makes it for me, which is crazy that they were so smart to hold 9 years and then they sold at the bottom of the bear market and they didn't want to wait for another bull market. Crazy. But going forward to today, that's the only time that we have such a huge move of Bitcoin. We're not gonna call it selling, and we are not necessarily even gonna say that these guys sold. These are moves from one wallet into another. It could go to an exchange. They might decide to maybe upgrade the wallet into a newer wallet and then just change it and not sell anything. The assumption is if you are holding for 7 years or more and you move it, probably it's because you want to sell it. It's kind of paranoid perception, but indeed it's not that paranoid, because every time that you see these peaks in the chart, very shortly after, the price has a significant correction, which kind of indicates that there's some correlation that we should be tracking whenever we see these bastards move their coins. And they did this week. So we don't know if they have sold, but I tend to get a bit more profit taker as soon as I see them moving their crap, because they are holding big amounts. And if we take a swing trade in here and we go into resistance, it gets me itchy to be holding a large swing trade on the week post a move from very long-term holders. So if we get into the resistance, that will be more or less 67 to 68 on the daily time frame. On RSI, we're gonna adapt these numbers to see. So let's say we get get to 68, that will give us roughly 110. 67 probably is 109 point something. Support, which we keep tracking, is at 54, and this 36 RSI is still my final line in the sand on the daily. So let's track those two as well. Support is 102, which we continue to test again and again, and we're just ranging in that diamond pattern, pinching the lows and then going to the tops and getting into a squeeze at the moment. The final line in the sand at the moment is at 89k and it's very quickly moving up, chasing this move. On CME on Friday we closed at 105.5, very similar to the previous week. It's becoming really boring, and the more boring it gets, the better the opportunities that are around the corner. If you call yourself a trader and you're not getting excited with boring market, what's wrong with you? It's the opposite. I mean, if you see the price moving up, 5k up, how do you feel? Do you feel, oh, this is the time to trade? No, that's the time to take profits. You need to look for boring market, retail, throw in the towel. All these things are opportunities, and that's why I'm looking for alpha at the moment. Large holders remain there in the area of accumulation. Let's go back to the weekly time frame, this time on the RSI. I promise you a very quick update on this. We are on Saturday, we are above support, and this is positive. We reclaiming this yellow line that has been critical the whole 3-year so far cycle from 2022 into now, and we have been rejected there, and it's been painful. So we care whether we can close above it. You can see that in here we closed slightly above it, and that's still counted as a rejection. So I will love to see this not to close just at 69, but possibly at 71 on Sunday, if it's not too much to ask, which I believe is a lot to ask. We are on a weekend, there's low volume, and it's also not nice to rally on a weekend. So we are in a tricky situation there when we contrast that we close at 105, we are at that price. So if we get the breakout on the weekly and we regain support on weekly time frame on RSI, that probably means that the price has moved to 109, 108 on Sunday. Then we have a CME below us, which means that we need to come back, close it, and that's another step, another checkbox that we need to complete to get the full script into that 117k, where we take all the red initial liquidity from the long-term chart. And yes, I promise you guys, we were going to cover the monthly time frame, this linear regression that is, I have to say, spooking me a little bit. Maybe not spooking me, but it's keeping me on my toes as an important data point to consider, supporting the idea that RSI is about to top on the monthly basis for the cycle. Not necessarily the price, but if the RSI tops in here, the whole strategy that we're going to use in 2025 shifts one level in the ladder down. And if you don't care about that, I will find that crazy. Let's look into where we left this. We had 396 days of monthly RSI above 70 in 2012, 337 on 2017, 181 in 2021, and we did a linear regression of that, which doesn't really take space rocket science to get into that. It's just 400, 300, 200, and 100. Doing it with proper math, you get 92 days, which is 3 months, right? So 3 candles that we should be above 70. And it's tricky because the first candle that we did that was the candle from 1st of November into December. Then we got the December one, and then now we are doing the January one. So that counts as 3 months above 70. Caveats: the one in the middle is not actually above 70. There is a small tiny fraction that you can see in the data window. Basically we did 69.89, so 1 cent below it, making it even more interesting. So my take on this is, at the end of January, I really want to see something invalidating this, creating a breakout when it comes to the length above 70, this particular trend coming from the diminishing times. Ideally, I would like to see this candle to make at least halfway towards the RSI target, which based on this trend line should be somewhere around 79. And if we get to that 79, by the end of January, maybe? We could make everything fit. The theory of getting into 79 together with the theory of 90 days above 70 still has around 5 days to shake hands and play out together. All it needs is that January should have a massive rally towards the candle close monthly, getting the RSI into 79, and in order to do that, the price needs to get before the end of January into 116k. Is that doable? Yeah, 117. There it is. So if before we close January we push the price until 117k, then this is crazy. We get to please the two theories. The RSI gets into 79, hitting the resistance on the monthly. Check. Second, we get this RSI monthly to do 3 months there. And if that is the case, February should then correct after that. It is allowed still to go to 130 intra-candle, but by the end of February, it should close quite bearish. So this RSI in February, regardless of this one pointing there, closes below 70. And then voila, we get the whole theory to work. Likelihood of that? I'm not going to really make any bet in here, but I'm gonna close it there and tell you that this is the analysis, and I hope you enjoyed it. Next, we need to look into liquidation levels. For the context of liquidation levels, the open interest now it's coming back into the red area, as you can see in here. What does it mean? That there has been some reset on the open interest, which we can also perceive in this chart in here. If we focus on there, you can see that the open interest that has been ranging in here since pretty much November now is in the middle of the range. So we have wiped from 32.2, which is the resistance of the open interest in this range, back into 30.6, which is kind of in the middle. And that's why when we go to CryptoQuant, it's showing us that it's about to cross this line, which is, by the way, one way of finding local bottoms. Has it triggered the signal? Not yet. It needs to cross below the orange, and we need to find a point where it's actually curving back up. That is where I found, by overlapping it with the price, that you get the best alpha. I'll let you know if we see that happening in there. Coming back to liquidation levels, this is the scalping chart, and we got a very interesting level there at 107, and we have below the price 101, but this 101 is not as big as this one in red. This is short-term time frame, so let's zoom out. Let's see if we can find anything else interesting apart from 88, which is always there, super interesting. Long-term chart, well, I already reviewed all of this, overlapping it with other pieces of the analysis. On their order book, there is really nothing I can mention apart from there is a little bit of bidding in here, but since it's so mild, it's been used just pretty much to swing up and down, support and resistance within that symmetrical triangle that we cover, but there's still not resolution in the direction of the exit from there. On the 4 hour, we had that breakout, but it's been going just sideways, and we are still inside the diamond. So 4 hour is inclined to say that we should be breaking out from the top, but I still continue to look into more data. I'm not super convinced that we're gonna follow what the 4 hour has said. And within the same diamond pattern, you can tell that the delta has been very flat, shifting between 200k to minus 200k, from green into red, and no side is really taking a huge amount of risk. At the moment, it's so shallow, it's just 70k, extremely cute. This is just the tip of the iceberg. When the delta is so small, it doesn't mean that there is little amount of positions. It just means that the difference between the longs and the shorts is very insignificant, but there can be a huge amount of longs and shorts still. Something tells me that that's not necessarily the case, because the open interest also has reduced. Amount of open interest is amount of positions regardless of the direction they took. The 110k wall is still there. It hasn't increased that much. Mid-January it was 83 40 million. Around 20th of January it became 112 million, and by now it's 125. During this whole week it's been fluctuating more or less around the 130, 125. The purple wells are pointing up. Those typically hint towards the direction of the price, so that is another data point if you want to catch it. And I think now from the delta we have something that we can potentially trade. Okay, it's not there yet to take a decision. We are in the red. That is the areas where we look for a long. It means that there are a lot more shorts at the moment in a position, and what we do typically is we find the top and we place a line. It's a little bit tricky because there was this spike there that doesn't really allow me to do something as steep as this, so I'm gonna keep it like that. And remember, we had the middle area in here as support, and we were expecting to see that this was going to reset there. That would have made it a great opportunity in terms of risk reward, but it ended up bouncing back up into this area. The setup will have been to enter there, so we are very close to that. If we see some negative move down, for example, we get a bear trap with a breakout of the diamond to the downside, and this enters in the buy me now. We will look into that. Make sure that you're following me on Telegram, Instagram, and Twitter if you want to be informed of anything time sensitive. And the second opportunity is if we see continuation to the upside and a breakout above this area in there, that could hint that there is further upside towards the top of the channel. Either opportunity could be interesting, especially if we overlap it with other pieces of data. There is some buying interest at 103. It's been shifting up. It used to be at 101 with 700, and then they move it up with just pretty much 700 again. And there is a buying wall at 91k that remains there from the times where the pattern was the widest. Liquidation levels of the past 30 days, the largest level is now 107. That is in confluence with what we saw in the short term from Trading Different, and the 109.5 looks smaller now. It's still 2.7 billion cumulative of liquidations, but now this one seems larger. And below the price, the largest one is 100k. Fair value gaps, we have one very close to the price, which seems too easy to take. This one ends at 105,660, and below the price there is nothing until we get to 96k, and then the 92.5, which is a little bit fatter. Notice that on general markets we closed 2 weeks in the green, and we got new all-time highs on the S&P, not on the NASDAQ yet. We bounce off the 21 weekly, which tends to be a signal saying the rally should continue. Contrarian to what the hive was saying, there was an expectation to get to 19.6 from those bearish divergences, but instead of that we only made it to 20.5 once we found support on the 21 weekly. Gold continues with the rally, and dollar confirmed closing right at support at 107, and I insist it will be amazing to continue in the red for the dollar. Why is that? Because we already have a red engulfing candle into support, and right after we have this 1 2 3 4 5 7 candles in green. So in here we have again a red engulfing candle, and if we don't want to see another rally into resistance, and we want this pattern in there to turn into a bearish one and not just their second retest of the breakout to the upside, we want another week of bleeding for the dollar. That is definitely going to help all assets. And as we say in the beginning of the video, we're gonna have some great fun. I was on a call with one of the VIP members in my community. Nowadays VIP members are joining with a call from my website, thetradingparrot.com, when they want to just chat about TA in general, get my views on certain coins. Of course, I don't provide financial advice, but I explain my methodology, the tools I use and stuff like that during those calls. In the past, those calls were pretty much all centered around trading with bots. And during the call this week with one of my clients, I was looking at the chart of Bitcoin from the distance, and I noticed that you can perfectly match a line like this. I left the chart after the call like that, and I started scrolling on YouTube during this week. I tend to use YouTube not to watch the videos because I don't want to hear certain opinions because they end up causing me a bias, so I skip watching them, but I look at the thumbnails just to test the sentiment overall. You know, I like to be a contrarian, so the more I see people saying A, I do C, and I saw so many people putting this in their thumbnails, which I found crazy because I found this and then the days after I didn't even publish it and everybody was talking about the same. Anyways, this is pointing towards a potential market top in here unless we repeat the same plate that we had in 2021, which is a double top with a higher high. Call it whatever you want, even a dead cat bounce, which I like to call it like that because that's what it is. And if that's the case, you could see something like this into the end of 2025, getting a top at 118 right after a big correction. So I'm not saying the correction needs to go necessarily to the CME gap at 76, you know, but this is more or less how it will look like. And the fun I was promising you to have in the video is to show you alternative views from this, because I don't like mirroring just one theory. I like to have multiple options on the table and then start inclining towards one of them as I see that the price tells me that might be the one actually. And as opposed to what people do, which is they see this and they end up marrying it and dying with this idea, even if the idea is early hinting that is not the one that is correct. So we're gonna make some initial alternative proposals in here, starting with doing BTC, and I'm gonna use the all-time history index divided by the NASDAQ. And by doing so, and notice that I'm gonna keep the chart in regular because you cannot do this with the logarithmic. If you try to connect this with logarithmic, everything is a curve, so you need to apply a curve instead of a line. So I'm just gonna keep it in regular. And you can tell that now we get something even better, because in the previous chart we were seeing a connection between 27, 2021, and then testing this top. But now we get pretty much all cycles, right? You could argue even that before this there's another test there somewhere, but 2013 in December, then you get 2017, and then you get April. This is the ratio. So we are dividing by NASDAQ, and NASDAQ is having an influence on each and every candle, of course. And if that was the case, we should still be due for a lot more upside. So how much upside? So in order to calculate that, I'm just going to measure all of this, and I'm gonna say that this is around 17, 15K, whatever was the bottom, and this is the top right now. So more or less this line is roughly 90K line, okay? And if we place this from the top of the price into here, it's telling me more or less that we have at least still 60 to 70K up. So this is just fun. It's not my forecast. It's just an alternative way that we're gonna park there together with the other one. And I had to do the calculation like that because these numbers on the side, once you do the ratio, won't allow you really to do it properly. So let's go now into my second fun, crazy theory. This one is not gonna be for a top of the market, but for a bottom of the market. Let's do BTC and let's divide it by S&P. Just like this. You can see there the formula. So I'm dividing one by the other. And in this particular version, instead of using regular, I'm gonna use logarithmic because I'm going to use a curve right underneath every bottom. And you can tell that it's not necessarily testing every single bottom because in here it gets a bit tricky. But if you allow me to say that this is the first bear market, I can place the line like this. This is bottom of second cycle. Then you get around here, more or less the bottom. Then this bottom of the previous bear market. So we could argue that the next bottom of the bear market based on this regression is somewhere in here, right? Because we still have 2025 and we are going to start 2026. 2026 is supposed to be the beginning of the bear market, where from that top we start dragging down, right? So imagine that top is somewhere in here, no one knows where, but wherever it is, by 2026 December, we should have found a bottom. So that bottom is more or less in confluence with this area of the price. And if I remember right, and I transpose that to this, that is the area where we top at 48K. So the next bottom, according to this particular vision of the bear market, should be somewhere between 40 to 48K. Again, just speculation, no idea what I'm doing, no financial advice, just doing this fun curve in here. Let me know what you think could be the next bottom of the bear market and why. We have the ETFs, and definitely that has shaped differently the Bitcoin network, the nature of the asset as a whole. So I'm sure in some way, the same way it changed the expectations of having an all-time high before the halving or reaching these prices so quick, maybe possibly is also going to affect the lowest price that we can reach. Less volatility has been kind of the concept given more echo in the past year videos. Guys, if you want to trade Bitcoin, Ethereum, any of the altcoins, and you want to support this channel, listen to what I'm gonna say. My two preferred exchanges at the moment are Bybit and OKX, and that is when it comes to functionality. Which exchanges are offering me more coins, better quality coins as well, on spot, with leverage, contracts that make sense, the limits and all those things. Where do I get less frustration? Then I go with these two exchanges. And if you want to open an account as well and you use the links in the description supporting this channel, you can claim up to 60,000 in rewards on OKX and 30,000 on Bybit, and then you get the lowest fees to trade as well as a reward. If you don't want to do KYC, you just want to stay away from all of that, not having issues with deposits, withdrawals of crypto, not needing to set up a VPN to access the exchange in one day, forgetting and then getting your account in trouble, then consider one of these two non-KYC exchanges. You got Bluffing and 2bit. Either of them are currently offering awesome campaigns. On Bluffing, you can even get a Rolex, a MacBook Pro, an iPhone, a Nintendo Switch. It's all based on trading volume with Bluffing, and on 2bit, you can claim up to 30,000 in bonuses, in this case based on deposits and trading volume. Guys, I remind you to hit the like in the video before I let you go. Leave me a comment down below with what do you want me to cover for the video on Sunday. I will really appreciate if you can share some cool ideas. I'll see you in the next one. Bye bye.